right, first up, we've got Chris Berg. He's a professor of economics at RMIT University and the co-founder of the RMIT Blockchain Innovation Hub, recognized as an authority on issues of economic freedom, regulation, and civil liberties, and one of Australia's leading advocates for free markets, individual liberty, and the integration of frontier technologies like blockchain. Chris contributes extensively to academic research and public discourse, and his work focuses on the transformative potential of blockchain technology and how it can reshape economic systems and empower individuals in the digital age. So please welcome Dr. Chris Berg.
Thank you so much for having me. I cannot believe that straight after afternoon tea, where you've had a fantastic and probably very thought-provoking day, you must be completely exhausted. They thought, you know what they really need to hear from? They need to hear from a professor of economics. Oh, God. So I'm going to try to say a few interesting things, hopefully, and try to keep everybody revved up and excited. I've been asked to talk about the future of technology, so I've given this incredibly overwrought title, A Tidal Wave of Change, Preparing for the Super Transition. It's preparing for the super transition that I really want to talk about. Over the last couple of years, I and my colleagues have been thinking about a lot of blockchain technology stuff, but really when we were considering blockchain technology, we were thinking a lot about, well, this amazing and very unusual technology, what happens when we put it in the economy? What does that technology do to the way we organise ourselves in companies, the way governments operate, the way communities function? And we've written a lot of interesting books that I recommend you all go out and buy on Amazon.com, available for you right now. But what I'm going to present to you today is a book that, in fact, we've just literally sent to the publisher about an hour ago. It's called Institutional Acceleration, and it talks through this argument that I'm going to share called the super transition. So you are going to be one of the first audiences to hear this argument. If the argument isn't very good, I really need to know as soon as possible, because we can get it back from the publisher if possible. But I want to talk you through this argument because I think it helps us understand not just what's happening with blockchain technology, but what's happening with all the technologies that we're being asked to adopt and adapt to in 2024 and will be asked over the next decade or two. So what is this super transition? The super transition describes a really fundamental transformation from an industrial to a digital economy. Now, we might think that we're in a digital economy already because we've had the internet since the mid-1990s in Australia. We've been using emails, we've got social media, Facebook can change the shape of presidential elections. But what we're describing with a transition to a digital institutional economy or a digital economy is where the very structure of our economic relationships, how we organise ourselves, goes through software, goes through these digital technologies. And that's been enabled by the fact that we don't just have one digital economy, or one digital technology, but we've got this huge range of digital technologies coming online at the same time. And I'm going to explain, these will give us a much more open, complex, global and distributed economy world that we all have to navigate as businesses, individuals, employers, and frankly, regulators and governments. So what are these technologies? That works. Fantastic. Well, I've given you a little list here. Some of these technologies are, they exist right now. They are changing the way you do your job already. Obviously, we're all using ChatGPT and artificial intelligence to do our day-to-day job. Some of them are upcoming. Quantum computing is a forthcoming technological change that we can think a lot about. But all of these technologies, blockchains, AI, quantum computing, advanced cryptography called zero-knowledge proofs, and low Earth orbit satellites, if you've been watching all of what Elon Musk has been doing over the last couple of years, all of those make material changes to the way we organise ourselves. So again, I'm an economics professor, so I think about it, what is the economic value add of these technologies? What do they do at an economic layer? Well, blockchains give us trust. They economize on trust. They're a tool for trust. Artificial intelligence gives us more prediction. Again, if you think through the economics of that, if you've got more prediction, the cost of prediction goes down. We're going to use more prediction in the economy. Our economic organization is going to use a lot more prediction. That's what AI gives us. Quantum computing gives us a new type of compute. Zero-knowledge proofs and advanced cryptography gives us more privacy. Low Earth orbit technologies like satellite give us more connectivity, ubiquitous connectivity. The revolution that the mobile phone gave us, the smartphone, where we've now got the internet everywhere we go, well, we can get exponentially more of that ubiquitous connectivity with the low Earth orbit technologies, which are now being released at scale around the planet. But the point that I want to make here is that it's not just about these individual technologies by themselves. It's not just, well, blockchain's going to do this, and then we're also going to get AI, and that'll do that, and we don't just add them up. They're not just additive, they're multiplicative. Because these technologies don't just get used by themselves, they get used in combination. I've spent a lot of time over the last year or two thinking about the combination of blockchain and AI. How blockchain can provide an economic infrastructure for artificial intelligence, for how artificial intelligence makes distributed systems like blockchain work better. Because when we combine these, they give us even more technologies. They give us even more exciting combinatorial innovations that, again, you and I and governments are going to have to figure out how to adjust to, how to adopt, how to adapt, how to regulate. They give us new ways that we can manage the data markets that allow us to build these amazing frontier AI models. Ultimately, and I won't talk through all of these because that would be incredibly boring, ultimately they give us the capacity to have what we call autonomous agents working in the economy. I'll talk briefly about autonomous agents because it's very exciting and kind of almost scary in a lot of ways. The technologies we have from AI, combined with the technologies we get from blockchain, allow us to create autonomous agents that can conduct exchange and economic coordination by themselves with very little intervention from individual people, from their owners. It's very easy to see how over the next decade we won't just be trading and exchanging with each other, but how we will be trading and exchanging and renting and buying and sharing with artificially intelligent agents that use economic infrastructure to make those exchanges with us. That's not sci-fi, that's literally, I've seen this work already on blockchain technology right now. There are AI agents that are creating new cryptocurrencies, and those right now are some of the highest performing cryptocurrencies in the market. I haven't bought any because I'm an idiot. In a moment we'll hear about what we should do when we think about markets. But these are incredible combinatorial technologies that exist right now that we all have to adopt to. And of course, there are every different combination of those 5 or 6 technologies I've talked you through create new and exciting things. The point I want to make about all of this, though, is that it's not just that we get an exciting collection of new technologies, because these technologies aren't just new things to buy. They're not just new widgets we create in factories that get put into our companies, that get regulated by our governments. It's not just more of the same stuff. It's not the same stuff, but more. It's not just new stuff sold through the same vehicles. It's not just the same organizations with new products. These are what we call institutional technologies. It's not just new things to buy. It's new ways to organise ourselves. That's what got me really excited about blockchains in the first place. Because these technologies are reshaping the very institutional framework of our economy, the rules that allow us to coordinate. A very simple example of that is we organise ourselves for the most part in companies. Companies are an institution. They're a way that we coordinate so that we can do joint production, that we can capital raise, that we can manage ourselves. But in the blockchain space, there are these things called decentralised autonomous organisations that allow us to do exactly the same thing in completely different institutional frameworks, more democratically, more globally, more permissionlessly. As we create more combinations of these frontier technologies, we get more institutions. That's really, really exciting because if you should know one thing about what makes a country rich, what makes a civilization prosperous, it's better institutions. In fact, the Nobel Prize given to Acemoglu and Robinson and co-authors this year was for precisely that, the Nobel Prize in Economics, for a finding that it is good institutions which lead to prosperity, lead to wealth, lead to advantage. And we're getting more good institutions. We're inventing institutions as we talk. And we're inventing them at a really fast pace. So these good institutions, an economist like the Nobel Prize winners I just mentioned would argue, good institutions give us good technology, but at the same time, we're using those technologies to create more institutions. That is a feedback loop we have not seen before. As an economist, I have not seen that in history. Feedback loop that gets us from institutions to technologies and technologies which allow us to create good institutions ourselves. And just to belabor the point, better institutions gives us more innovation, gives us more economic growth. That's really the story of the last 2,000 years. I'll finish up just by explaining what I think this economy is going to look like. It's going to have 4 characteristics. It's going to be more open. These digital technologies, these frontier technologies, benefit from openness. That combination is possible because of the openness of those technologies. They're going to be more accessible. They're going to be more democratic. They're going to be more innovative because we can all build on top of open technologies as opposed to closed technologies. It's going to be a much more complicated economy than we are used to. It already is, thanks to the internet. But that complexity, that global complexity, is going to accelerate. It's going to be a more decentralized economy. I think firms are going to become more decentralized, even smaller. I think centers of power, economic power, political power even, is going to decentralize over time as these technologies start to shape how our economy is structured. And it's going to be a more global economy. These are global first technologies. They're technologies that are available to everyone on the planet simultaneously. In a funny way, that's, again, what has excited me about blockchain. If I launch a product on a blockchain, I don't just launch it in Australia, I launch it immediately everywhere on the planet where it is permissionlessly available to anyone who wants to use it. So these 4 characteristics are very different from the economy that we have inherited. I'll finish by just providing a little bit of advice. This is, of course there are challenges, of course there are risks, but ultimately this is about opportunities. I think for entrepreneurs, I suspect for the people in this room, there's a lot of lessons that we can draw from this technological change. I think there's going to be a premium to creativity, a premium to generalism, to understanding as many things as possible about the environment around us and being able to bring in tools from everywhere else. Again, we know this just using ChatGPT. If you're not using ChatGPT to personally upskill yourself, then you are falling behind right now. That dynamic is going to get stronger and stronger and stronger. Sam Altman, the CEO of OpenAI, thinks that this suite of technologies is going to give us the first one-person billion-dollar company, one-person unicorn. That's coming, and that's coming soon. For established businesses, I think we need to figure out how to encourage our teams, our workforces, to experiment publicly, or at least experiment with their colleagues, these new technologies as well. Some of our research has found the phenomenon that we call shadow innovation. Often people are in workplaces are secretly using some of these technologies to make their jobs better. But the firm that they work for isn't necessarily realising the benefits, the productivity benefits that they can get from them. And then for policymakers, I think the government's going to have to think a lot about how to deal with the problem of pace. This is so fast. These technologies are coming so quickly. It is a barrage of technological adoption that is happening to the economy. How will policymakers keep up? That is going to be very difficult and is going to require a great deal of experimentation. I'm going to leave it there, just with the one final point. I think this suite of technologies gives us incredible opportunity for experimentation, for success, and for really rethinking the fundamental economic value add of everywhere we work, our own personal jobs. I've spent a lot of time thinking about what my role as an academic might be in face of these fundamentally revolutionary new technologies. And I think the challenge for all of us is to do precisely the same. Not just to keep up with the changes, but to take the maximum advantage of them. Thank you very much. You'll be able to buy my book quite soon. And you can see me on the internet.
We've got another speaker coming up, same sort of presentation length. We're going to keep them short and sharp, and then we're going to get into question time. But I'm going to pose this to the audience, just a quick show of hands. Who here knows the cryptocurrency SUI? Show of hands. What was that? 4, 5? 5, okay. Who here knows the cryptocurrency Bitcoin? Here we go. This should be fun then. I'm going to introduce the next speaker, Mr. Ben Simpson. In 2017, Ben dove into crypto and quickly noticed some serious problems. A huge lack of quality information, fraudsters looking to drain your wallet, and there was a few of those in 2017, misinformation everywhere. It was nearly impossible to know who or what to trust. It was somewhat like the Wild West, and it kind of still is. Ben learned the hard way, losing more money than he cares to admit. You can ask him later how much. But it taught Ben many valuable lessons, and the two most important things were that Bitcoin was, in fact, going to change the world, and that too many people were being set up to fail. So in 2020, Ben founded Collective Shift. Today, a global platform with over 1,000 paying members. The aim of Collective Shift is to help individuals invest their crypto through education and research, delivering them high-quality insights, in-depth analysis, easy tools, and I'm hoping some gains along the way. Welcome, Ben Simpson.
Good there. Awesome. That was an intro. Thank you, Chris. And also, I want to say, from a professor's standpoint, Chris, I'm from Tassie. I'm a high school dropout, so this might be a little bit of a different presentation. Rightio. So quickly, I just want to show hands again. Who actually owns crypto? Owns, not just heard. Yep, cool. Who's in profit? Who's made money? Recently, yeah, the last few days. Who's lost money? Okay, cool, awesome. Hopefully I can give you a few tips. So essentially, I've been in crypto now for 7 or 8 years. As I said, I'm originally from Tasmania and come from a sort of low socioeconomic family. And my parents always told me I need to go out and learn about money. And if I wanted to build anything, I needed to go out and do it myself. And when I first started to learn about money, I started to realise how money is actually created, why it's worth, what it is in our pocket. And you look at the $10 note and go, well, why is this money worth, the value that we put in trust? And essentially what I started to realise was that, the money game is essentially a trust game, right? Governments, used to, back money by gold. You could go into the bank and you swap your $10 for a pack of gold or whatever it might be. And they essentially went off that system a number of years ago. And I started to go down this rabbit hole of, figuring out what is money and where can you put your money. And that's what, led me to Bitcoin. And essentially everything that, Chris went through, that is what is built on the blockchain. So I won't go too much into blockchain today, but I essentially have been investing in this space now for 8 years. I've done a TEDx talk on Bitcoin and Ethereum, which you can go out and check if you want to go a little bit deeper. But yeah, essentially now I help investors. We're completely independent. 99% of my wealth is in crypto, and I try and help others do the same. We don't have a project. We're not a token. Not trying to sell you, a lot of crap that we've been talking about, in the wild west of crypto. We're essentially, independent analysts, and I'm trying to build a global leading company of insights and research for markets. And yeah, we work with a lot of the leading companies across Australia. So I wanted to put this chart here. This is a nice looking chart. This is essentially a screenshot of the Bitcoin price yesterday. So this is in US dollars. Bitcoin hit its all-time high yesterday, 89,000, roughly 140,000 Australian dollars. 2 years ago, Bitcoin was at 30,000 and we're at 140,000. Why are we going through these prices and why are things going absolutely crazy? Well, one of the biggest things was the introduction of an ETF, right? In the US, a lot of where money flows through these electronic traded funds, where it's really easy for superannuation funds and retirement funds to get access to different assets. And for the first time this year, people could now buy Bitcoin through an ETF. Now, Bitcoin, in my opinion, is a better version of better version of physical gold. So gold has always been that place where you store your money and you're trying to, beat inflation. And this goes back to my thing on money, like what is money? The reason we get inflation, the reason property prices go up, the reason, fuel, supermarket, everything's going up is because of inflation. And at a really, really simple level, not an economist's view, but a simple level, it's because the governments print money, right? They print money into the economy, you get a rise of supply, and then, prices go up. Bitcoin is the complete opposite of that. There's only 21 million Bitcoin that will ever be created. Very similar to gold, although, technically speaking, you can still go and find gold today. Bitcoin is hard-coded. There's only 21 million Bitcoin that will ever be created. And when you get these favourable economic conditions where people have money to invest, it finds its way into risk-on assets like Bitcoin. And over the last 2 years, Bitcoin hasn't really performed really well because of the economy. Inflation's been high, rates have been high. But because of recent things in the US, rates are coming down. People are looking for places to put their money, and they're putting it into Bitcoin. One of the biggest holders of Bitcoin is MicroStrategy. MicroStrategy are essentially a software company. They've got absolutely nothing to do with Bitcoin. They build software. And from what I understand, there's a few software companies here today. Michael Saylor is one of the biggest Bitcoin believers on earth. Over the last 2-3 years, he's accumulated on his balance sheet 250,000 Bitcoins. He's up $8 billion in profit on his balance sheet from Bitcoin alone. And the stock price has gone absolutely nuts. What people are starting to realize, if you've got a lot of cash in your business or personally, especially for bigger businesses that have a lot of cash, if you're holding billions and billions of dollars of cash, that's essentially losing its purchasing power. Every year, you lose essentially about 5 to 10% of purchasing power through inflation. So if you're holding $1 billion, you're essentially losing $100 million every year through inflation. So what are you supposed to do with that money? Bitcoin is now that solution. Now, love him or hate him, Donald Trump obviously being elected has been a huge beneficiary for crypto. He's a huge believer in crypto, and he wants the US to be the crypto capital of the world. Because of Donald Trump's election, essentially Bitcoin has just absolutely exploded, along with a bunch of other cryptocurrencies. There's over 2.5 million cryptocurrencies now. A lot of them are built on blockchain. And we're starting to get these hysterical, crazy, euphoric, FOMO-driven headlines. News.com.au posted this November 11th, 2 days ago, that experts claim that Trump's election will send Bitcoin to $1 million. And I believe Bitcoin will go to $1 million one day. Probably not anytime soon, but in the next 10 years. When you have such a limited supply asset like Bitcoin, and you have the huge demand of people coming in, the price only goes one way. And this is what we help people do, and our analysts have sort of put together a bunch of things to help us, put some sort of projections behind different assets. Bitcoin, as I said, is about 90,000 now. I do believe we're going towards 150 by the end of next year, US dollars that is. And if you look at where a lot of these other coins are going, there's meme coins, there's a bunch of different stuff. There's a lot of crap in the space of crypto. I'm not going to lie, 95% of the projects are crap, and that's what we try and do to sort of eliminate the good and the bad. But I really want to leave something with you today, and that is start to try and question, money. What is money? What gives the value of money? And start to get your head around Bitcoin, because Bitcoin's not going anywhere. A lot of people think it's a scam and it's going to zero. There's a lot of people that hate it, but that's what gives us a market, and that's why I believe Bitcoin's going to continue to go up. And I'm keen to get in some Q&As today. So if you need help, I don't want your details. It's not email address gated. Don't need your any details, but we put together for our clients basically a 10-step process to help you think about investing into crypto, you personally or a business. It's a PDF that you can get access to. Again, it's completely free. You won't have to give me your email or anything like that. But essentially, I want you to start thinking about, for you, all your businesses, if you're holding a lot of cash and you're looking for wealth creation, I fundamentally believe Bitcoin is the best place to do it. Thank you so much, and we'll get into some questions. Cheers.
Thank you, Ben. Thank you, Chris. Probably 5 years ago, maybe 5 people in the room would have even heard of most of this and be interested. Look how much it's changed so quickly. Talk about the signals earlier from Simon, and we'll close off with that. But look how much this has kind of changed. So, got a panel here, and Courtney is, the leading person bringing this forge together, and the speakers and connecting everybody. So, I have to open it up to all three. Let's start with some questions. What have you got questions for either? Chris, how much does the book cost? All of those things. What about the other 4 books? If you bundle them together, we get a cheaper price. What's that in Bitcoin? So let's start with some questions. Who's got one? Tim, first hand up.
Yeah, thank you guys. And questions for Chris. So I think the term you used was autonomous economic agents, like that, to refer to AI participating in the economy in that way. My question's around what demand means in the context of an agent like that, because they certainly don't desire the same things as us. There's a different substrate, and demand, of course, is a critical part of economics. So how do we factor autonomous AI agents interacting in a context where demand is critical, but they themselves are not actually authentic generators of demand, at least in the same way we are?
There we go. What a great question. Thank you. So there are 2 ways to think about this. So you could code whatever demand you want. So the famous example of there are people who worry that AI is going to take over the world. The example that they use typically is the paperclip maximizer. So you say to the AI agent, the AI system, that you've got one task, and that's to make paperclips. And if you don't put any context or boundaries around that, then this AI agent might use all the world's resources, might use all the universe's resources to pursue that one task of creating paperclips. Now, that's an example. I think it's a fundamentally silly example, but it's an example of coding in a demand function, if you're doing that. What's much more plausible, what's certainly being likely, is when I'm describing autonomous agents, I think the path that we're going through is not truly autonomous as in deciding completely what life to pursue, what preferences to have. It's agents that we can set off for to do tasks. Maybe we code in a range of things that we would want to be available to us in due course. We code in our preferences, or we tell it, I would like to, make sure that all my emails are responded to in a timely fashion, or I would like to be able to invest in this particular product in due course. Could you go off and make the choices in between where I am now and the goal that I want to get to? So in that sense, I'm actually sending off an agent, which is why we call it an agent for me to do those interesting things. We're very close to that. So Claude, there's an AI company called Anthropic. Their model is called Claude. It's a competitor to ChatGPT, OpenAI's ChatGPT. They've got something called a computer use model that allows Claude to take over your computer. So you can say, hey, can I send Courtney an email? And then it will very slowly and very awkwardly, because it's a very early stage model, it will awkwardly do all the steps. It'll take a little mouse and it'll click Outlook and it'll start typing the email and all that sort of thing. That's the sort of autonomous agents. It's working autonomously, but it's working as my agent. So in that sense, this is an insanely overwrought answer to your question, but the demand function comes from the people who are directing the agent, if that makes sense.
Thank you. Another question? Yes, so I'll come to you, Adam, afterwards, but Thomas at the back there.
I'm curious, how do you think when quantum computing comes to the point where it can read everything anywhere and nothing's secure anymore, how will the 256 that secures most cryptocurrencies work or operate? How will it change the playing field?
Yeah, great question as well. It's a serious problem. So most of the world's economy is based on cryptography, so quite apart from crypto. Most of the world's economy, your email systems, everything, is based on cryptography that is not quantum resistant. Now, there are quantum resistant cryptographic standards. The banks now use quantum resistant crypto. A big challenge that we have is we know that quantum computing is coming. We know that quantum resistant cryptography exists. It's expensive to upgrade your cryptography. And so when does a firm make that choice to spend on that? Because it's like an unknown. It's like we knew that Y2K was happening and we knew exactly when it would happen. So we can set the investment then. But this one, we know exactly what's going to happen, but we don't know when. So all these cybersecurity managers are, they're on the spending side of the business. Well, the security officers, the CSOs, they're on, they don't really want to outlay that. So I think it's a real challenge. It's a challenge that we will tackle. I'm not catastrophic about it, but it is a big economic problem.
Okay. Next question. Adam, you said one. Yep.
That was my question. So that was awesome. My question for you, Ben, then, is Trump's obviously bucked the trend, but CBDCs, if you look at the momentum around Europe and here, how do you see that playing out? And is CBDCs counterproductive, obviously, to a thriving, free crypto world?
Can you explain what that is to the
Yeah,
layman?
so
The layman
CBDCs are essentially central bank digital currency. So it's a stable, it's a currency that the banks and governments essentially control. It's essentially the opposite of what Bitcoin is about. So Bitcoin is built on a blockchain. It is decentralized. No one owns Bitcoin, and it is essentially controlled by you. With a central bank digital currency, it's owned by the banks and governments. So yeah, it's been a big push. I think in Australia, they're still pushing for it. I think from my understanding, Trump is very against the CBDC. He spoke at the Bitcoin conference, I think 6 months ago, and said if he was elected, there would never be a CBDC created in the US. But I don't think it's in competition because I think they are so fundamentally different. I think everything is moving on chain, and we're looking at AUD stablecoins and the Aussie dollars moving on chain as well. So yeah, I think people will realise that the Aussie dollar and Bitcoin, or central bank digital currency and Bitcoin, are two completely separate things. Some people may not realise that, but it's definitely the antithesis of freedom and Bitcoin.
Yep. Final couple of questions, and we're going to wrap up. Let's try someone I haven't said before. Eric?
Can I ask a quick question? I've got a question. Ben, for you, BRICS coming in as a potential competitor to the US dollar. What's that stablecoin look like? And how does that the BRICS standard coming in, how is that going to shape the cryptocurrency stablecoin markets?
Yeah, I think, I don't know, every man and his dog's trying to create stablecoins at the moment. Stablecoins are essentially a digital representation of fiat currency. So the US dollar has a stablecoin, Aussie dollar has a stablecoin. Stablecoins is one of the best use cases for blockchain. If you think about trying to sell large amounts of money from shares over the weekend, it takes you 2 days. The bank blocks it. It's just an absolute nightmare. Stablecoins, I can move any value of currency anywhere in the world instantly. So stablecoins are a huge market. I think it's just going to be a race to who gets the most market share, and probably governments regulating who and who can't use the stablecoins.
Governments hate it because, like USDT, they're like an 11-person operation turning over how much?
They're massive companies. Tether is one of the biggest stablecoin companies in the world. They have billions and probably hundreds of billions of dollars. Yeah, they're massive organisations.
Eric?
All right. So my question is more about the future. And the future, I'm talking about 20 years from now. The change is accelerating so quickly. We've learned about AI today. We know about how blockchain is going to take over everything. I've got a 4.5-year-old son who's going to go to school in a couple of years, and he's going to get out of school in about 20 years. I cannot imagine what they can teach him there that will get him prepared to whatever he's going to emerge in. Apart from literature and philosophy, is there anything else that's going to stand the test of time?
I think this is a problem that we have, right, at universities. How do you train people to navigate technologies that you don't know exist yet? Very difficult. I mean, I do have a very practical answer to that, the presentation I just gave uses consistent economic reasoning to forecast out. And so understanding the nature of institutions allows me to understand what happens when institutions change. And so, if to pull that back to, everyone in this room who isn't trying to be a professional academic economist, there are skills that we use, entrepreneurial skills, there are skills about navigating unknown environments and unknown circumstances that are consistent regardless of what the technology is. What will be devalued is sort of day-to-day skills. This is how you use this software package. This is how you do this precise supply chain organisation or structure or whatever it is. That's the sort of skills that are very temporary. Happily, they'll be very easy to learn. If we all learn how to learn outside formal schooling, which we all know how to do that, but we need to be trained about the discovery process of adopting to new things. And that's a problem for both primary education all the way up to tertiary.
Thank you. As John Maxwell says, change is inevitable, but growth is optional. So you do have that kind of choice. We've got a... all right. Sorry, one more question. It's 83-year-old Neville Christie, always curious.
It means we're 5 minutes over at the end of the night. Are you okay with that audience?
Yeah, don't hate on us, hate on Neville.
Chris, sorry. First of all, I'd like to say thank you so much for your talk. That whole notion of the institutional framework just thrilled me to bits because one I'd like to put to you. You've talked sort of mainly at the big end of town, but if we get 10 SMEs, all compatible and all different, and put them together into a tribe and say, okay, we are now a venture capital and venture management organisation. We have all the clients, all the money, all the research, all the ideas, everything we need. All we need to do now is share them, and we can afford the 5G and we can afford all this stuff because we're going to share it. And, we can create new wealth by innovating collaboratively. That's an institutional thing. I'd love your comment on.
No, 100%. I think one of the things that interests me about some of these technologies is that we can use it to, you've described it as sharing, we can use it to collaborate and cooperate in new ways, but also in ways that we're familiar with in lots of parts of the economy, but haven't been adopted to others. So co-ops. A lot of, when I was describing decentralised autonomous organisations, they function as basically on the internet co-ops. We know what co-ops are like, and they're very powerful. They're limited just to a few industries. We can take lessons from some of those. We can digitise them. We can. I think the lesson there for whether it's the big end of town or the SMEs or individual entrepreneurs is that we can mix and match and discover and experiment in a way that we couldn't do so 10 years ago.
Fantastic. Can we have a round of applause for our panellists? Thank you.